Hey there, traders who are trying to figure out what on earth a wash sale is. Jennifer Louise here, and I am going to do my very best to simply explain what a wash sale is, why it matters to you, why you don't want to get them, and how to avoid them. What do most traders think about wash sales? A wash sale is when you sell a security at a loss and then rebuy it within 30 days. They happen really quickly. I had never heard of a wash sale until I had triggered one. And then I went in to try to discover what the hell it was, and it made no sense to me. Here we go. I'm going to use Monopoly to illustrate what a wash sale is and how it is triggered. Okay, prepare yourself to be taken somewhere with a wash sale explanation that no YouTuber or YouTube video has gone, because the cost basis part of it can be pretty complicated. I'm going to use Monopoly as a simple way, at least in my mind, to explain what is going on with the cost basis part and the disallowed loss element of a wash sale. So you are way into this electric company and you want to buy one share. And so you buy one share, which is going for $75. And then, at some point in the future, it could be a day, it could be a week, it could be a year, you decide to sell it because it's gone down to $50. And you said, $25 is the most I'm willing to lose on that trade. And you hit that point, right? So you sell it, and then here you are with your $25 loss on this trade. And that's fine. That's a normal just kind of loss. But then what happens is a week after you sell it at this loss, you decide, oh my God, it's only $40 right now. That's just too good of a share price to pass up, so I'm gonna rebuy it. 1 week later, after selling it at a loss, as soon as you rebuy that one share back at $40, you have now triggered a wash sale. So this thing that was just a loss now becomes a disallowed loss. And this is where it gets really complicated, because then you'll also notice on your cost basis, this $25, this $25 loss is going to get added to your cost basis. So it's going to look like you spent $65 on this stock, which you didn't. You spent $40 for it. Here's a response that I got from Charles Schwab. I called them to ask some detailed questions about wash sales. They're amazing, but they needed to talk to some people who had more advanced knowledge and about wash sales. And so this is the response that I got back in regards to cost basis and how it's attached to like what shares, etc. So this is the answer. Hi, Jennifer. So the answer is the wash sale would only be applied to the first next share. If you realized a loss on one share and then bought 1,999 shares would be clear, but one share would have the wash sale. My cost basis team informed me we would be able to distinguish it from the other shares in the same exact lot at the same time and price. We would be able to distinguish shares in that lot by clicking on the cost basis. One share of that lot would show a W for wash sale. It would only be applied to the one share. So if I sold 500, bought 1,000 shares and triggered a wash sale, it would only apply to the first 500 because 500 was the amount that was originally the number of shares owned. And what's going to happen with this $25 when you sell it? So let's pretend it gets to 100 and you decide, I'm going to take the profit, I'm done with this bad boy. But then this disallowed loss is totaled for the year. And I know at Charles Schwab, they give you, reports that have all of your disallowed loss totals for the year. So this will not go away. For that trading, for that year. So you cannot deduct this $25 from your taxes. Most of us are just normal, average people, and we are allowed $3,000 in deductions. While $25 might not seem like a lot, these accumulate. For example, my last wash sale was $600 in disallowed losses. And so why does it impact somebody like me, like you, a retail trader? This is important when it comes time to do taxes, because when you have a disallowed loss, that means you can't deduct it from your income. So if you're making $55,000 a year and you can deduct $3,000 in losses, you're gonna pay income tax on $52,000, not $55,000. It might not seem like much, but if you do the math, that is a $660 difference. And for me, that is like a trip back home to see my family. So it might not sound like a lot of money to some people. Oh, it's those 600 bucks. It is. So in that example, those were allowed losses. But with wash sales, they're disallowed. You cannot deduct them. And when you have wash sales that are triggering these disallowed losses, you will end up, by not being able to deduct those losses, you will end up paying taxes on income that you haven't earned. I understand why the IRS has the wash rule, because if it wasn't there, I could essentially wipe out all of the income tax that I owed with deducting those losses from trading. So it would be very easy to manipulate. This is what drives me crazy about just, I guess, tax policy in general. You've got the little guy or gal facing this like wash sale stuff and trying to get their heads around it. But we all know that for the people who are extraordinarily rich, who can afford the expensive lawyers, the expensive accountants, basically the best of the best, they have options available to them tax-wise that no average person has access to, because it's too expensive. One way is to elect mark-to-market accounting. This is something that you have to do with your accountant. There's papers and stuff you have to elect to say that you're going to be doing this mark-to-market stuff ahead of when you're doing it. So like, let's just say you have a terrible year in 2020 and you're like, oh my God, I've got 50,000 in disallowed losses. I'm just going to go mark-to-market. Well, it won't work retroactively. It will only work for going forward. So you'll still have those losses. So it is really tough to get around, but you can do the mark-to-market accounting method, but you have to, the key thing to know about it is that trading has to be your primary source of income. You can't have that elected as your accounting method, from what I understand. Like, let's say if you have a full-time job and you are just trading on the side, you cannot elect to have that as your accounting method. Trading has to be your primary income source, and you definitely want to talk to a tax professional about that. But just in case you were like, the simplest way to avoid triggering a wash sale is to just not repurchase what you have sold at a loss within 30 days. Please consider subscribing to my channel. I hope that you have found this video helpful. Comment below, share with us like your wash sale nightmare stories or anything good. If you have something good to share, please do give the video a thumbs up, and thank you so much for watching.